I don't know. I'm struggling with the too bearish case because again, I said it last week. I was wrong. I thought we would have an extension of the weakness from 2022. I thought we'd have a meaningful recession this year, like everybody else in the world, and no, just wrong. I've been interested to watch a few people just double down and say, no, it's coming. It's coming. I've been there before. Don't double down. Just admit you're wrong.
Hello and welcome to Money Talks. In today's video, Mark Yusko gives us an update on his current macro thesis and his perspective on current global market conditions. Also his prediction for Bitcoin and crypto, and where she thinks the market will go in the next months. So let's get started with the video.
Long bonds were up 9% not that long ago, literally, a couple months ago, and are now down 5% for the year after suffering, one of their worst, if not the worst. It was definitely the worst for the 10-year. I'm not sure it was the worst for the 30-year last year. And I think there's a lot of sudden fear, and rightfully so, around this idea of, whoa, wait a second. Default, what's this default word you're talking about? The U.S. Treasury can't default. Well, it can, and it doesn't very often, if ever. Probably way back when in history there may have been something, but no, it's not normally seen as an option. Therefore, the idea of downgrading from AAA to AA kind of seems odd. On the other hand, basic supply and demand, right? The price of those bonds is falling because there's excess supply and limited demand. And if that trend continues, which it appears that it's going to at the rate that our government keeps spending, I think it's not a full-on panic yet, Mike.
Yeah.
But it could turn into one. And panics can get ugly in a hurry.
With Bitcoin ETFs around the corner, Bitcoin has been one of the most talked about crypto in 2023. With its meteoric recovery in 2023, followed by a fair share of corrections, many people wonder what Bitcoin's future holds. With a third bearish week, Bitcoin prices experience a growth in selling pressure, with a 3.97% drop in market value. The oldest crypto maintains an overall positive trend with a year-to-date YTT growth of 75.49%. Currently trading at $29,047, Bitcoin prices with a market capitalization of $564.825 billion are below the 50-day EMA and approach the 200-day EMA. The Fear and Greed Index, a popular tool to gauge market sentiment, currently stands at 50. This value suggests a balanced market sentiment, with neither excessive fear nor greed dominating the market. Bitcoin's landscape is full of exciting signals. Despite a recent dip, Bitcoin's growth this year is positive. The Fear and Greed Index shows a balanced market sentiment. Bitcoin mining stocks like Riot Platforms are on the rise. But the upcoming Bitcoin halving and potential share dilution could be challenges. Market indicators like the estimated leverage ratio and the adjusted SOPR show mixed signals. Traders are taking more risks, but coins are being moved profitably. The low stablecoin supply ratio suggests huge stablecoin supply could enter the market. This could push Bitcoin and other cryptocurrencies' prices up. Coming to the exciting part, Bitcoin could hit nearly $100,000 for miners to keep their operations. Some predict Bitcoin could reach $45,000 by year-end and $125,000 by the end of 2024. And the chance to be part of this growth is now.
I mean, the problem with markets, particularly gamified markets, the markets of the last 20 years are very different than the previous 140. They just are. And that's because technology has moved the incremental investor away from Wall Street onto Main Street. And not just Main Street US, but, Main Street Russia and China and everybody else. And so the gamification, that's totally real. And the other piece that's real is the boomers, myself included, the boomers rigged the system, right, by creating this passive wave. And Mike Green and others have talked about this ad infinitum, but it's real in the sense that every 2 weeks, the vast majority of people's retirement, right, gets invested into mutual funds. And the mutual fund companies wrote the law to make that happen. And now most of that money goes into an S&P 500 index fund, because that's the choice that you have. They don't give you a lot of choices, and that's the biggest choice. And so it is a reflexive, self-fulfilling prophecy. And it's because today Microsoft and Apple make up 15% of the S&P. And it's like 30% of NASDAQ. I think that number's right. I mean, it's a crazy percentage. So every time that money comes in, the money doesn't get to think. It doesn't say, I think Amazon at 300 times earnings is a little rich. I'm not going to buy that today. Nope, it doesn't get to do that because it's dumb. And I don't mean unintelligent. I mean rule-based. It must hit the bid and buy. And so that is going to keep happening. And as long as that happens, that momentum feeds on itself, and then you get the short squeeze, right? Again, in the old days, like only 30 years ago, it's not that long ago, 30 years ago, there are these people, Jim Chanos and others, that were the watchdogs of the lunacy. So the lunacy would happen. People would get ebullient and they would buy things, and they'd push MicroStrategy to a level that never should have got it, $330. And the short sellers would come and say, that's wrong, and I'll take the other side. And they would push things back to normal. And people like Julian Robertson and George Soros and Michael Steinhardt and all these great long-short equity managers built amazing firms, basically providing this service as watchdog, guard dog. And it was glorious. Well, those days are gone because of high frequency trading, and Ken Griffin now is the largest stock lender. Why would anyone borrow a stock from Ken? Because he's going to squeeze the crap out of you on the other side because he's a market maker. So why would you do that? But people do. And so we've had the largest short covering in the history of markets this year, 2023. And that's what's driving. And again, that is not real demand. That is dumb, rule-based, forced demand. That problem is acute. And to your point, it did break in that first wave down, right? When crypto broke and everything broke, and we went into this, basically, like you said, the market is a leading indicator. The market knew that 2022 was a recession. The market declined 20+%, right? That's what markets do when there's a recession. And so the market told you that there was a recession. Now, the market also told you that the recession was over and that we were recovering, but then it accelerated. And now we've had no increase in earnings. We've had no increase in E, but we've had a massive increase in P. And so our PE ratio, our multiple expansion, has gotten to levels, again, that are just in Stupidville. And how long can they stay in Stupidville? Longer than, the rational person can remain solvent, usually.
So, what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.